Okay, in this video, I'm going to walk you through how I set up my charts for the continuation breakout trade. So if you look in the blog, the success story section, and then the videos on the YouTube channel, over the past few weeks, the past few months, even the past couple of years, me and my coaching students and subscribers have traded the continuation breakout trade over and over and over again here on Bitcoin dollar. You can use this strategy on other cryptocurrencies. We also use this strategy trading Forex. So it is a continuation. I call it the continuation breakout trade. It's actually one of the first techniques that I developed back in 2001. So I started trading in 2001, and there was a few things that I was trying to do with the continuation breakout trade, which was to trade actual breakouts. But I started off using the Bollinger Bands, and the way the Bollinger Bands move, they don't like it wasn't helping me the way I interpret the information on a chart. So you can show one chart to two different traders, and they're going to give you different feedback. They're going to give you different opinions, and some traders just like to go long. Some traders like to go short. Some traders like to whatever. We all have our own ways of doing things and things that make us comfortable, specifically with trading. So what I needed to do with a continuation breakout trade was box in ranges of consolidation. And in order to do that, that required for me to then go back and study and learn and understand, and also how to quantify consolidation. I needed to give consolidation a specific range, and I needed to know how to figure out what is or which ranges of consolidation are the most significant ones, so that when I see a candle that breaks out of that range, it's truly a or a breakout, which would be the continuation breakout trade, and it will trend in the direction of the breakout. And I guess what I should say is the distance that it covers after the breakout is going to be different, obviously, on the time frame. If you take into consideration the time frame that you're using to execute the trade, for example, the 1 hour time frame, the 4 hour, the daily. If you don't get any signals on the 4 hour, the daily, but all of a sudden you get something here on the 1 hour time frame, maybe you're getting in a little bit early, but and then the trend would eventually, maybe when the day closes, you can look at the daily candle, and then things will sort of set up. But what I'm getting at is that you have to have your expectations in line and in order when or before you get into the trade. You need to know how long you're going to hold on to the trade. Are you going to let time determine when you should close out your trade, or are you using specific take profit levels, which are price points on the chart? And what I prefer to do, and what's worked for me since 2001 over and over again, and this technique, by the way, is accurate 90 to 95% of the time as long as I execute it correctly. You have to have these things in order, or it won't work. If you change any of the parameters, it won't work. So I prefer to use these price targets, because these price targets are going to repeat over and over again. So when I was able to determine the breakout, this was back in 2001, so it was like first step, right? I had to figure out what is consolidation. So consolidation is so subjective. You're going to show consolidation to a few different traders, and they're going to go, okay, well, I would use that low and that high. And then somebody else would say, well, I would use that high and maybe, this low. It just keeps going on and on. It's really subjective. So that's what I needed to understand. So I studied consolidation for a long time before I even moved to the next step. And then once I saw candles that broke out of the time frame, that was also a big challenge, figuring out which time frame I wanted to use it on. So I did a lot of testing there. I won't go into the story about how I figured all of this out, but I'll just give you this brief overview of what the continuation breakout trade is, so that if you want to use it, you're comfortable with understanding what's going on behind it, right? The mechanics with the trade. It's important that you know how to do this. If it's my trading technique and I'm sharing it with you, and then you want to use it, you got to get all the feedback and all the information and all the answers from me. I've got to show you how it works. So that's what I do with my coaching students anyway, and my members in the membership area. So usually what's going to happen with the breakout is, again, going back to identifying the most appropriate range of consolidation. And I teach you in my membership area exactly how to qualify if a range of consolidation is the most appropriate one. And then once I get the candle that breaks out of that range, whatever that consolidation range is, and then again, based on the time frame that I'm trading off of. If I'm trading off of a 1 hour time frame, I want to capture a pretty big, decent move. I mean, compared to people that trade off of a 1 minute chart, 3 minute, 5 minute chart, I want to get a bigger piece of the move, and I'm comfortable with the 1 hour time frame. Don't let people tell you, oh, you can't trade off of the 1 hour time frame. We do it all the time. Me and my students do it all the time. I always do. I always have. It will always work like this. For day trading, the 1 hour time frame is a very reliable time frame. You'll know that over time with testing, but I've been trading for about 18 years, and I know that this is going to provide me with the best signals, at least according to the way I trade with these strategies. I can't tell you if the 1 hour time frame is going to work with somebody else's trading system. For the most part, it is a very important day trading time frame, because people are going to look at it, at least for a day trading, because you're trying to get in and out within one session or another, or maybe within a couple of days. But they're going to go back and look at this as a pretty significant range or time frame to determine where is price likely to stop if there is some kind of a trending move that lasts 1, 2, or 3 hours. Very often that's what we see. A big move, and it'll last maybe 1 to 2 or 3 hours, and then it stalls or goes flat, sideways. The same thing happens with a lot of other markets as well. Doesn't always happen, but very often this would be the chart and the time frame that you would go to try to get a gauge of where price could sort of settle and stop. When you start looking at a 1 hour time frame, a 1 minute or a 5 minute, things get pretty choppy. You're looking at it in a really myopic point of view. You want to be able to step back every once in a while and take a look at what's going on overall. When I get the candle that closes outside of that range of consolidation, then I look at the Bollinger Bands. As I said earlier, what I was doing originally when I first started trading and I was trying to trade breakouts, I was just using John Bollinger's, his tool, the Bollinger Bands, and then I was using appropriate indicators for it. But again, what I was saying is the way it lines up with these bands, they're not making solid horizontal support or horizontal resistance lines. You see what I mean here, though? When I stick a resistance line here at resistance and one at support, I can start to box in this range of consolidation. You can see that it's choppy, right? If you look at the Bollinger Bands, you can see there's a lot of activity, a lot of movement. And it was still a little bit confusing to me when I first started trading. So that's why I went to boxing in these ranges of consolidation. It made more sense to me. Visually, when I'm scanning my charts, that's what helped me look for the breakout. And then I went to the Bollinger Bands. Now, a tip here with the Bollinger Bands. Very often with a lot of the free charting programs that you use, you don't always get access to many of the indicators that John Bollinger recommends using with the Bollinger Bands for confirmation, or to figure out some of these different techniques that he recommends for the Bollinger Bands. So what I need to do, for example, what you're looking at right now is the MetaTrader platform. The MetaTrader platform, I use this to trade cryptocurrencies, but I also use it because I can switch over and trade Forex whenever there's activity and economic data on Forex, and I can also trade futures. I can trade oil, gold, index futures. You can do the same thing. So I'm using these same patterns, this same structure across all of these different markets. So again, going back to free charting programs, you're kind of limited in some cases. It really depends on which one you're using, of course. There's so many of them out there. But if you find that you can't use the accurate, appropriate indicators that John Bollinger recommends if you're going to be using the Bollinger Bands, what I found was that what I need at the same time, and he recommends this as well, on the breakout, you want to see these Bollinger Bands separating away from each other, and that shows a sign of strength. Very often, depending on what you're trading, you don't always get the opportunity to see true volume. For example, in certain Forex pairs and things like that, you don't always get if you can see volume levels and you can track that, that's definitely an indicator that you need to use. But again, if you can't see it, I'm just sort of throwing a few suggestions out there depending on what, cover different chart programs, depending on what you're using. But if you can't see it, you've got to look at these Bollinger Bands on that breakout candle if you're going to use this technique. And you absolutely have to see the Bollinger Bands separating away from each other. That shows that there's momentum, there's volume, and it should continue in the direction of the breakout if everything else lines up appropriately or accordingly. So once that candle closes, this is another tip I want to share with you. I found that I eliminated a lot of my trading mistakes by simply waiting for the candle to close relative to the time frame I'm trading off of. If I'm trading off of a 30-minute chart, if I see a setup, I want to see the candle close on that time frame, the 30-minute, before assessing and determining whether I have a valid confirmed signal. That's how my trading system works. And it works like this for me all of the time. I mean, very often, how many times have you seen price spike low and you think it's going to take out support and it's going to, it's time to start selling, and then it turns around before the candle closes and it rolls right back up, and then everything goes back the opposite direction. I used to get caught in head fakes and moves like that all the time when I first started trading. And I realized just by looking at these closed completed candles, I would eliminate half of my mistakes, approximately. So try that, relative to whatever time frame you're looking at, unless you're, of course, trying to get in. If you already have the signal and then you're trying to get into the trade, of course, you're going to have to look at the open live candle. But for the most part, if you don't have a signal and you're just looking for confirmation, try waiting for the candle to close before getting in and assuming that the candle is going to close in a specific way, because that's not always the case. We've all been there as traders where we see things change around just at the last few minutes. So be careful with that. So I have to wait for this 1 hour candle to close. Then I have my signal. Then I wait for my entry. And I have to confirm with the Bollinger Bands first, making sure that they're separating away from each other. This first indicator that you see right here, this is a CCI indicator. It's set at 14 on the 1 hour chart. I set it at 14 on the 30-minute chart. And then I have the MACD histogram. Now, on that close completed candle that breaks out of that consolidation range, there cannot be any divergence in that CCI indicator. And there cannot be any divergence in the MACD histogram. The MACD histogram, I don't customize it or change it. I leave it at the standard default settings. You can see right there. It doesn't matter which time frame I'm using it on. Now, this technique, the continuation breakout trade, if you're going to use it, again, if you change any of these parameters, if you change anything that I'm doing, you're obviously going to get different results. This is just the way I do it. I developed this method. I created and put together each one of these components. I didn't obviously invent these indicators, but I put these indicators together, combined, to give me the the most accurate confirmation of a possible breakout trade and a trending move afterwards. Now, you can use this continuation breakout trade on a 4 hour chart, and you can use it on a daily chart if you want to swing trade it. And I would recommend stepping back every time you see a continuation breakout trade on the 1 hour chart and take a look at the 4 hour chart to make sure that things are sort of lining up and giving you, additional confirmation that price is going to continue in the direction you expect it to. Very often, but not all the time, a 1 hour candle will print just like this and give me a continuation breakout trade. And if I switch over to a 4 hour, I can see that the 4 hour, by chance, is closed at the same time, giving me that additional confirmation. So I can get a continuation breakout trade confirmation across two different time frames. That makes it even more powerful. In my opinion, it always works as long as everything else lines up accordingly on the 1 hour time frame. Remember, you don't want to look for a 4 hour continuation breakout trade that confirms, but it doesn't confirm on the 1 hour chart. That wouldn't make any sense. And then try to execute on the 1 hour. You've got to execute and confirm everything according to relative to the time frame that you're looking at. But of course, step up one like the 4 hour or the daily to make sure everything lines up appropriately. You don't want to be selling this into a major support level that you can't see here on the 1 hour chart, but it's easy to see on a 4 hour or daily. So you have to step back and take a look at the bigger picture. Those are the three indicators, and those are the indicator time settings that I use for this particular time frame, the 1 hour chart. Now, if I was to trade and I was swing trading and I wanted to use this continuation breakout trade on the 4 hour or the daily, I would still use the same indicators, exactly as you see it here on the charts. But the CCI is set at 20, and then the MACD histogram, again, is set at the standard default settings. I don't change that on either the 4 hour or the daily chart. I just change the CCI on the 4 hour and the daily time frame to the 20. I use the CCI on the setting of 14 for the 30-minute and the 1 hour time frame. Something else. Don't use the continuation breakout trade on the 30-minute chart. You'll get head fakes. I know, because when I first started to piece together this method, I started using it on a 30-minute time frame, and I was still experiencing head fakes. So what I was doing was I would notice, for example, let's say that this candle right here, the one that broke out below support, let's just imagine that this is the 30-minute chart and this closed at 10:30 in the morning, and then the next candle that opens at 10:30 to 11 goes right back up inside a consolidation. So if I would have just switched over and used a 1 hour time frame, the 1 hour chart would have showed the candles staying above support, and it would have never given me a signal. So that's something that I also realized when I just simply switched over to a 1 hour chart. I eliminated about half of my head fakes because I switched to the more appropriate time frame, the 1 hour chart for day trading. So this one was actually a trade that worked out just fine. I called this out with my coaching students, my Bitcoin and cryptocurrency coaching students, this technique, I teach you exactly how to do this in my membership area. I give you the precise entry, the stop loss that we use, and then there's always, unless it's a shorter trade, but there's going to be always 2 take profit levels on these trades. So with an entry of approximately 62.90, we traded it down here to the 62 level just before it bounced. It takes a little while sometimes. Sometimes these trades will pay within 2 to 3 hours. Other times it's going to take a day or two. It just depends. You can't control it. And that was one of the things that I was talking about earlier when I first started speaking here, is that before you get into a trade, you got to get your expectations in line. Are you going to use time to determine whether you should close your trade out, or are you using price levels? And I use price levels. So as this trade, I'll go ahead and detach this and move over to this range right here. So as this trade was open, it hit its first target right after the first hour after getting into the trade. And then we had our final target down here at 62. And it took a while, right? But throughout this trade, I'm analyzing the price structure and making sure that everything remains intact, to expect price is going to come back down to my final target down here. It was still holding with that price swing, that A high, B low, C retracement. Nothing really came back and significantly took out the C retracement level, that C high right there. And then that's when it dropped down and hit, I think it cleared, I think it went to like 87. Yeah, 61.87. So it cleared 62. We took our final profits here, and then the whole thing reversed. This is pretty common, and you know this if you're trading Bitcoin for quite some time. Right now, this looks like, and I got the question earlier, is this a continuation breakout trade here? And it might be a signal, but it's not qualified. It's not a confirmed or a true breakout. We're still dealing with the previous price swing. You need to step back and take a look at what's going on. Sometimes it's hard to see what's really going on here on the 1 hour chart. So toggle through between the 4 hour and the daily and take a look at the candle patterns in there. But this is my A high, B low, C retracement. It's taken out the C, but has it just retraced to a deeper Fibonacci retracement level? That's the question. And that's why it's not really a true continuation breakout trade to immediately start buying it back up. It could, and if it does, then I would look for a different range and maybe trade a different strategy that I have, like maybe a Tech 1 trade, which is a reversal or a move and a pullback after a breakout. These are different strategies that I have. But with enough time, sometimes you just have to stay out of the markets if it just looks too confusing to you. I know how difficult that is. It's easy to say, but hard to do. I mean, I struggled so hard at the beginning of my trading career to just get my hands off the mouse and not take another trade when I didn't know why price was moving. But sometimes it's okay. If you don't know which direction you should be trading it in, who cares what everybody else is doing in those chat rooms or those threads and forums and things like that where everybody's posting stuff? Who cares about all that? I mean, if you're going to compete with those people, you're going to find yourself making and taking a lot of trades that are going to cause you to lose because you don't know why price is moving. Everybody else you think is trading, so they say, right? You don't even know if they're really in a trade. They're just saying it. And then you don't even have a setup. Like if you don't have a confirmed qualified setup, don't take it. And if you don't have a system in place and you're still trying to trade, I would just say, whoa, stop and find somebody who can help you and get learn a strategy that's proven and then figure out how to apply it. Like really get to know that one particular strategy so well that you know when to use it, when not to use it. Get access to the person who developed it so you can ask all your questions and get all of them answered. If you don't have a trading system in place right now and you're still trying to trade, you're gambling for the most part. I mean, you're just trying to like follow along what everybody else is doing, and you're going to find yourself, you've probably already seen the results. You're not going to get anywhere very fast. And I want to switch one more moment here to the larger time frames. So we're going to take a look at Bitcoin dollar, and I come back to this daily time frame all the time. And all I can say, sometimes people say, do you think that this is the next move back up to 10,000? Do you think it's going to go to 13? Everybody's saying that maybe it's going to go to 20 before the end of the year. Or, what do you think is going to happen? And my first answer is when it breaks out and if it's going to be a trending move to the upside, we're going to know. We're going to see. And you're going to get an opportunity to trade it. It's not going to go straight from 6,700 all the way back up to 20,000. I guess it could. But I doubt it, right? You're going to get an opportunity. You're going to get a breakout. You're going to get probably a pullback and then a bounce off of the level that it broke out of in some cases. Sometimes it'll take a little while longer and then maybe pull back later on. Whatever the case is, you're going to see it here on the daily time frame. You're going to get an opportunity to trade it. And anybody who says that they're going to get in at the exact low and the exact high is crazy, in my opinion. So, because you'll lose a lot of money trying to pick and guess every time it forms a low, because you see what's happening here after the fact. But what about back over here when it was bouncing around 87, 97, 92, 95, 9,000? I remember back over here at the beginning of the year, there were a lot of people on the internet and YouTube saying, okay, well, we're expecting a bounce here at 8,700. Let's start buying. Well, it's sitting down here at 63. So you get my point. You can't keep picking these bottoms. You're gonna see it if you spend the time right now learning technical analysis skills and understanding how to create a system so that you can take in this information, whether it's political, economic, all of the things are going to have an impact on cryptocurrencies and Bitcoin, and you combine all of that together with your technical analysis skills, you're going to get an opportunity to trade this and make a hell of a lot of money. And I would stop. I'll tell you, I've been trading since 2001, and I spent a lot of time trying to pick exact highs, exact lows. Again, I'm not going to say that price is going to run and it's ready to run back up to the 20,000 or the 10,000 level just yet. But when it does start to move out and we get that confirmation, very often with these continuation breakout trades outside of consolidation, it will line up with some kind of information. So whether it's a comment, political statement, something that's having an impact on this particular market, it will almost in every case happen just like that. Not maybe exactly at that same moment, but maybe shortly after. It takes a little while sometimes. Market sentiment, everybody piles in, everybody reads the same information, shares all this feedback. That's what it takes sometimes. So be aware of that. But again, going back to this pattern right here on the daily time frame, this pattern repeats over and over and over again. And I talk about it in many of the videos, and I show the comparison side by side between oil markets, gold, silver. I mean, so many different markets behave just like this, especially when there's some kind of a bubble, and then the collapse afterwards. It was so predictable. So take a look at some of the videos on the blog, and you'll see how we used this continuation breakout trade over and over and over again as it was breaking through the 1300 level back in 2017, and then as it broke through the 3000 level, you can see how it repeats, leading all the way right back up to when we traded it. I mean, I stopped. There's a videos there. We stopped trading it just as it approached the 20,000 level. And this is actually one of John Bollinger's methods, identifying the top, which is 3 pushes to a high. We used this strategy precisely the way he teaches it. I've been using it since 2002. When price started to move back down, we did the same thing. Traded continuation breakout trades all the way back down. Here we are now. It's just the same pattern over and over again. Take a look at a silver chart. Take a look at the oil charts for the most part. And the length of time that price will flatten out and go sideways like this inside of consolidation before it makes another move back up, if in fact it does, it really depends on the market and the psychology behind it. The people who are trading, here, I would go so far as to say, are different types of traders than, let's say, someone who's trading silver and has been trading silver for a while, or oil. So the chart's going to look a little bit different because of the psychology and the movement and the behavior behind it. But again, you've got a lot of frustrated people here that just got into Bitcoin late last year, and they keep trying to get in and buy these bounces, and the acceleration with these sell-offs doesn't surprise me at all to see it move down like this and stay down here. Frustrating a lot of people. Be careful with your day trades. So if you want to get a better understanding with some of these techniques, take a look at the videos in the blog area, but all of them are available. I teach you how to do each one of these strategies and execute them on the different time frames. Of course, if you've got limited time, you want to trade off of a 4-hour or a daily time frame. If you can day trade, maybe smaller time frames, I've got strategies for all of those time frames.